Hello everyone. Here I have a chart for the kiwi-loonie pair as the New Zealand dollar and the Canadian dollar. I have a recent trade opportunity here which just presented itself. But before I talk about that, let me share with you what has happened before now. So in the past, I had a trade opportunity here which I took. It's a 3.05 reward to risk ratio where I was risking 203.5 pips to get a total of 621.4 pips. So I have three levels of profits I've marked out here. So the first profit level has been triggered, has been triggered. So I have the profit from that first level. But the second and the third levels are yet to be triggered. So the remaining two trades for this initial entry are still on and running. So I have this bearish order block and I have the bullish order block here. So this level has been retested currently, and that's why I have the new opportunity. So we go forward now to the current opportunity. So where we have, let me resize this a bit so it's a bit clearer. So price has gone to some swings, low and high, up and down. So as I said before, the second and the third levels of profit for the initial trade are yet to be triggered. So they're still all running as we speak. And so just above this bullish order block here, I have a bullish harami candlestick pattern, as you can see by this small green candle in front of the red candle, a bigger red candle at the back. So interestingly, this word actually comes from the Japanese word for pregnant. So it's like you have a woman just behind and the baby bump in front. So mirroring a kind of a situation of a pregnant woman. So that's actually the Japanese word for pregnant, harami. So in this case, it's bullish, which means we have the green in front of the red. So we have a bullish order block here, and we have the bullish harami candlestick pattern. So that's two confluences for us. Let's see. There's a third one I saw. So along the line before this candlestick pattern formed, there are a number of fair value gaps I noticed. Okay, so here is there's space here. So in between this and this, I have a fair value gap there, which represents an imbalance in price of this pair. So that's likely going to be filled up again to close the imbalance. So when there's when there's a shift of balance, when there's when there's a topple of equilibrium, things have a way of turning around to make up for that imbalance. So that's what we are likely going to see happen sometime in the future. I don't know if I have any other. Um, I don't know if I have any other fair value gap, but that's sufficient for me to have this entry. So I have a fair value gap, I have a bullish Harami candlestick pattern, and I have the bullish order block. So these three are enough for me to enter this trade, which I have entered as I speak. So I have my entry point somewhere around here, 0.79251. So the higher one is for the previous entry. So 0.79251 is the current entry which I have here, which is lower than the previous entry. So here I have because of the lower entry point of price here, um, I have a higher reward to risk ratio of 4.29 here, a higher reward to risk ratio of 4.29. My stop loss is at 0.77651, which translates to 160 pips being risked for opportunity of getting a total of 685.7 pips. So as before, I've divided my profit into 3 levels. So I have the first level here. So to differentiate between the initial trades and this current one, I've decided to use green lines here, green rays actually, to show the different profit levels. So this is true. So this one is still on this blue line because that's what I use as my anchor to mark the highest upswing even before the previous trades. So that's that. This trade is running. The initial 2 trades from the second and third profit levels, which are yet to be triggered, are also still running. So I have another 3 here, which means I have 5 trades now running on this pair now concurrently. So I'll see how this progresses. I'm a swing trader, so this is going to take time. As you can see, this is a daily time frame. So some of these trades will not close until maybe in a couple of weeks, sometimes a couple of months. So the patience is also part of the trades. So it's just my availability of time for trading. Some persons have more time available to actually go with smaller time frames, but I don't have that luxury of time. So here's what I have. On one of my accounts, I was risking 0.25% per trade for the previous trades, and on this same trade, I'm also risking 0.25% per trade. That gives me a total of 1.25% I'm risking on this particular currency pair in that account I talked about. In the account I talked about, so maybe I'll look at that account in another video, but for now, here is what I have. I'll look at that account in another video, but for now, this is what I'll just talk about. I'll see as this progresses, and I'll keep you posted. I'll keep you updated as things play out. I hope you got value from this video, and if you did, please endeavor to share this video with others who may also find it valuable. And don't forget to like the video as well. And if you have not subscribed to my YouTube channel yet, endeavor to subscribe, and let's do more. Thank you very much.